It's Thursday, September 23rd, 2021, and today we're talking about Rewind and Dapper Labs both raise additional capital. FormHero raises an A and rebrands to Daylight. OpenDoor enters Canada via the Skylight. And a lightning round, iNovia SPAC, Foxquilt Series A, and Copperleaf goes public. Let's get started. First, play it again. Rewind and Dapper Labs both raise more capital. Alex, who raised what and from who?
Well, I hope you're familiar with both these companies. I'm sure we've talked about from both of them at least once or twice this year. So first of all, Ottawa-based Rewind raised 65 million USD from Insight Partners, Bessemer, Atlassian Ventures, Union Ventures, Fundfire, Invoice Capital, Ridge Ventures, and Scale Up Ventures. A bit of a long list, but, so that's
They've got to raise their minimum check size, Alex.
Well, what I think, they were really trying to raise $600 million to do something with the election, but they couldn't get there. So 10% of election bought right there. Then in Vancouver, you have Dapper raised another $250 million from Coatue Management, A16Z, Google Ventures, or what used to be called Google Ventures, and Version 1 Ventures. And the new financing round values Dapper at $7.6 billion. So wow. Both these companies we've talked about before, they both raised recently. There's a ton of money.
Okay, so if you've been following Quick Takes, you know their stories. This is the last time we're going to explain what Rewind does and what Dapper Labs does. So give it to it one last time. What does Rewind do, and why do you think they raised again?
Well, so Rewind is a data backup and recovery platform for SaaS applications. What does that mean in English? That means if you use right now Shopify, BigCommerce, QuickBooks, GitHub, or Trello, and you need to go to a version of your, that you had like 60 minutes ago or an hour ago, Rewind lets you do that. Now, why can't you do those naturally with those platforms? Is they're worried about backing up the entire Shopify platform. So if Shopify goes down, something were to happen, my guess is they can reinstall or take you back to something like midnight last night. But they're not doing backups for every single individual customer. So Rewind basically lets you back up to like the last change. They raised basically to take advantage of the growth in cloud services, and they saw a big boost due to people going cloud and remote work because of COVID. And what they say that they're using Roundup is to build new backup solutions, hire talent, and market the product. So they have a very ambitious roadmap for the rest of the year to early 2021. They want to be able to back up Xero, Zendesk, GitLab, Bitbucket, Jira, Weebly, HubSpot, Zoho, Confluence, Basecamp, and Monday, Asana, and Airtable. So really expansion product. They need money for the team. They need money to get that out. What's interesting is they have competitors, Own Backup and Druva, which have both raised massive rounds recently too. Own Backup has raised $230 million, and Druva has raised $147 million.
Got it. So is this part of growth strategy, but also signaling to the market that they want to be the market leader compared to some of these competitors?
Well, again, I'm not as familiar with Own Backup and Druva, so I think those are more enterprise. I think you'll see naturally Rewind go to more enterprise solution, to more backups they provide. I think this is just that they've had incredible growth. They have lots of ambition. You need to fuel that ambition with money, and they're taking advantage of the market.
I love it. Okay, last time telling us what Dapper Lab does. Go, Alex.
So Dapper Lab keeps on changing how to describe themselves. I saw a really nice description calling them a blockchain entertainment company.
Cool. I do love that.
You may remember them from the first hit, which was CryptoKitties, which feels like 10,000 years ago, which were these like kitties. They were probably one of the first NFTs. You could buy an NFT, they could breed and get unique properties and keep on breeding.
Man, even Top Shop seems so long ago now, doesn't it?
Yeah. Well, it's interesting. I read some reports that was out in 2019. I'm pretty sure it's 2020, but Top Shots put this company on fuego. They, since and for people that don't know what Top Shots is, NBA related NFTs. So it's like a video clip of a LeBron dunking. It's like trading cards, but for NFTs for basketball. Since they've launched Top Shots, they've had 1 million registered users, 13 million transactions, and 780 million worth of sales, which is actually, when you take the math, it's only $60 per NFT traded, which is a lot less than I thought it would be.
And yeah, but if you think of that like a baseball card, that's a lot per baseball card.
Yeah, and what's more impressive,
and you monetize it as it trades hands forever and ever and ever, right?
Yeah, they get a piece of it, and so does the NBA. And what's amazing is 1 million registered users doesn't sound a lot compared to Facebook. For anything crypto related, that's a huge number. Since launching Top Shots, the company has launched with has a deal with UFC, WNBA, and along with this financing, announced a deal with La Liga, which is Spain's top-tier soccer league. Again, like Rewind, a competitor also recently raised this week. A France-based Sorare, I guess, I don't know if it's Sorare or Sorare.
Your French is perfect, Alex.
Raised 680 million USD at a 4.3 billion USD valuation.
Wow. Okay, so if you're part of the TechTO community, why do you care about this news that both Rewind and Dapper Labs have raised again?
So first thing is Dapper's a 33rd raise of 100 million plus this year in Canada. The previous record was 12. So we're just crushing it. Money's flowing to the winners. What I think is more interesting in the takeaway for founders and early stage companies is the similarities between these two companies. Very different companies at the core. One's NFTs, one is SMB SaaS. But if you look at what's helped them get to where they are, there's the similarities. Both of them are in industries experiencing significant tailwinds and investor excitement. Dapper's NFTs, you couldn't probably get a hotter area. Rewind is benefiting from accelerated adoption of the cloud and a push to remote workforce. So both, so almost the future of work. If you ask two VCs what are the two hottest trends last year or three hottest trends, two would be NFTs, second one would be future work, the third one would probably be clean tech, climate tech. So both in the right space, the right time. Second of all, these companies started slowly. Dapper was a spin out of Axios Zen. They got a bit of buzz around CryptoKitties, but then went quiet for a couple of years. Rewind has slowly been building. Their first product was a Shopify backup, and it wasn't a hot company then. I think they may have even, they were looking to raise money. It wasn't always necessarily easy in the early day. Third thing is they've expanded beyond original product. Rewind was Shopify only. They now got six backups or 7 backups, going to probably 20. They're probably getting bigger and bigger customers as they add more backups. And Dapper had to build its own blockchain to handle the volume it needed for its for basically Top Shots and any other IP. And they went beyond their own IP and licensed other people's IP. So they launched CryptoKitties on Ethereum. Said that was a shitty experience. Let's grow it. And both these appear to be winners, but have stiff competition. So it's very interesting.
Amazing. Well, we'll have to keep following those stories at TechTO Quick Takes. And if you love keeping up to date on Rewind, Dapper Labs, and more, and how they're shaping the Canadian tech scene, you're going to need to subscribe to the TechTO newsletter. Alex, what can subscribers expect in tomorrow's edition?
Well, we don't, we produce a lot of content, but we think a lot of other people create interesting content, insightful content. So tomorrow you can find 4 or 5 recommended readings to make you smarter over the weekend.
All right, a little weekend reading, some homework, some back to school homework from Alexander Q. Norman. All right, next up, FormHero raises an A and rebrands to Daylight. Tell me about this raise, Alex.
So the company formerly known as FormHero rebranded to Daylight Automation and announced a $12.3 million raise from RTB Global, Bessemer Venture Partners, and Golden Ventures.
And remind us what Daylight does, formerly known as FormHero.
They offer a low-code platform that enables enterprise customers to build customer interactions while maintaining internal processes with increased accuracy. Basically, lets you create forms or capture information for your customers and make sure that gets from one part of your software to another part, so the customer experience is improved. Because I'm sure we've all worked with large enterprises where you go to, let's say, I don't know, one part of TD, you put information in, and you go to another part, you expect it to be there, and it's not there.
Mm-hmm.
The whole idea is let large enterprises get rid of that problem with low code, and opposed to no code where it's just drag and drop, or normal code. There is some programming here, but it's significantly easier. Like I imagine they have lots of almost recipes you can download and slowly encode around.
Got it. So part of this is the repositioning from forms to operations, which I guess is sort of a bigger idea, but makes sense. Do we have a sense of the size of Daylight?
So they have 90 employees. They have lots of large customers like BMO, Allianz, and Shoppers Drug Mart. Couldn't find revenues. And this is like basically most of the capital raised because they've previously raised about $2.5 million. So they're big, but they're getting big, but not sure how big.
Got it. And so are they going to use that money to keep growing?
Yeah, well, this is the simplest announcement of use of proceeds I've ever seen. They're investing in product and marketing with a focus on expanding the US. So pretty straightforward, not groundbreaking here. let's keep on doing what we're doing, but get bigger.
And if you're a Canadian tech founder listening to this, why do you care about this fundraise?
So I think there's two things I'd like to break down. First, the FormHero has actually kept their heads down, being pretty quiet, and just focused on building a successful business since day one. It's not a company that gets lots of attention, and they benefited from being ahead of a trend, just like the previous two companies. They were at the right place, the right time to get a bunch of tailwinds. If you talk about low code or no code, it's been one of those trendy subjects over the last few years. Bubble, Airtable, there's a lot of success there. Second thing is they focused, unlike the other two companies, they focused on enterprise companies, banking, healthcare, insurance, government, enterprise, government since the beginning. So very focused, building it. So you don't always have to be out there creating a lot of buzz. What I find more interesting here, and I have a bit of maybe a controversial take, is they feel compelled that they need to change their brand name. They think, if you read articles, they say FormHero creates problems for us selling into clients. They think it's just a form. People aren't going to bat, aren't explaining the bigger value proposition. So they're rebranding to Daylight to just get rid of that association. And I think, and I don't know about you, Jason, what do you think of rebrands? Do they work?
Oh, it's so hard. Think of all the goodwill that you've built up, all the marketing, all the backlinks, all the top of mind. Like it's out the door right away, right?
Oh yeah. Like the rebrands that have worked are stuff like where you're trying to hide stuff like Kentucky Fried Chicken. Some people say it's a fried, some people say it's no longer chicken, but it's KFC.
Yeah.
Bank of Montreal becomes BMO. Those work. Or if you want people to forget you exist, like Philip Morris's, I can't even remember their current corporate name. They want to not be sued, so they changed the name that you couldn't remember. Those work. But like, I can't think of many companies that have rebranded and seen a success.
I've gone through this at every company. It's always a question. Are we going to rebrand? Should we change it? And the answer, after tons of analysis and consulting and a lot of smart people thinking about it for a long time, is always no.
So what would you recommend when you do that? When you say no, what could you do?
Well, it turns out that the brand is much more than the name. And so a lot of the pushback that you're getting from the name, this is, in my experience, has to do with how you're positioning, how you're communicating, the look and feel, your marketing materials, your sales materials, your actual product, all sorts of things that have nothing to do with the name. And so often we spend the time and energy and resources, we're going to change the name on everything else.
Yeah. And I 100% agree with you. Instead of changing the brand, there's a couple of things you can do. You can introduce a new product, Daylight by FormHero.
Sure.
And if customers are not pushing you, can't beat a brand, there has to be something else. Go understand is it the positioning? Is there something wrong with the product? Is it lack of customer service? Put your effort somewhere else, because rechanging a brand's expensive. So I wish them luck, and I actually would love to hear how they came out with Daylight, because I have a company.
Yeah, you know what? There's also, I think, and then we'll move on from this topic, but I think you've got a great case study from your involvement with Logo Joy on this very thing. And that would be a really interesting one for us to talk about in a separate stream. And you know where else we could talk about stuff like this together, Alex?
Where?
Well, on Monday, October 18th, we are doing something that we have not been doing for a long time. We're going to see you in real life for a safe, fun, and exciting patio dinner at Toronto's favorite container destination, Stacked. Tickets include food and a drink, and we're going to hear from special guests. We did a TechTO patio dinner in August, Alex, right?
Yes, we did.
And how was it?
It was spectacular.
Yeah, it was spectacular. What was your favorite part?
My favorite part was being out near the lake and seeing everyone. Like, the content was great. Ruffalo, Zach, incredible firesides, but just meeting people from the ecosystem I haven't seen like 2 to 7 years. I don't know how long I've been in my house. It was just energizing.
It was energizing. It was fun. It was awesome to see everybody, and we can't wait to see you. Tickets are extremely limited, so you definitely want to get yours today. You can learn more and RSVP before they're all gone at TechTO.org. And on Wednesday, October 20th, Alex is heading out west, yeehaw, to join William Johnson and our Tech Together Vancouver family for the first time in almost 2 years. We'll be back at the Roundhouse Theater, and there are going to be tons of special guests. Learn more and RSVP at TechTO.org. All right, next up, OpenDoor enters Canada via the Skylight. What does that mean, Alex, via the Skylight?
Well, Skylight was a Toronto-based startup, and OpenDoor acquired them. So, you know, this one's a very straightforward one. Skylight was a digital home remodeling company that helped people basically with the renovations, anything from pricing to construction. So, you think of OpenDoor, someone that helps you buy your house and sell your house.
Mhm.
Skylight was the one that would help you renovate your house.
So they're in a similar market, but they've got different business models. Why does OpenDoor make this acquisition?
So I think this is more about getting a great group of talent. I
Mm,
know, you actually in the video you saw there for Tech Vancouver, that was Ian Wong from OpenDoor.
sure. And we've also had Fiona and Josh and people from Skylight in the community as well.
Yeah. And OpenDoor, like many large companies, has had a hard time hiring. And I know they've been actively looking in Canada. Now, everyone says they want distributed teams. They want to be able to just hire one person at a time, but companies still like to have a bit of a presence and have a bit of a community. So OpenDoor, Skylight, I think, was out there looking to raise. Somehow they got in front of OpenDoor, and OpenDoor said, hey, here's people that understand prop tech, residential prop tech, a bunch of talent. We want to have a team in Canada. Well, let's buy the team, and then we'll go from there.
And if I remember correctly, when Fiona first spoke at TechTO pre-pandemic, she spoke about building a remote and distributed company at Skylight, which at the time was pretty niche, pretty unique, and it's pretty cool to see how she's pioneered that model that almost every tech company we know of is using today.
Yeah, but they still had a good presence in Toronto despite that.
They did a hub model. So they all
Yeah.
worked from home remotely, but they were all in the GTA so that with some frequency, they could easily get together to do in-person problem solving and social events and build a sense of culture even when working in a distributed team. I loved it.
I wonder if they got a free home renovation for their home office with us when you join Skylight.
I don't know, but now they can buy their own whole new home for a home office. So why should the TechTO community care about this acquisition?
So the war for talent is only going to get harder and crazier. OpenDoor was looking to get into the Canadian market for a while. You know, it seems like every second or third day, me or you, Jason, get pinged by some global tech company with a lot of resources and shortage of talent. They look at Canada as a place with educated, experienced talent that is cost effective, and they can either hire people or they can buy companies. And I think you're going to see is as charge and as crazy as valuations are in this market, it's harder and harder to raise. It's counterintuitive. The winners keep on raising more and more money at crazier valuations, and companies are just slightly off from being perfect, are having a harder time raising. And I think you're going to see a lot more competition via large companies buying small teams and using it as a base to expand in Canada. So if you're a founder, make sure you have a team that's dedicated to you, you're paying a market rate, and they bought into your mission.
Oof, that bought into the mission, Alex. I've been talking on LinkedIn the last couple of posts. How do you do that remotely? It's hard work.
I think you either have a very strong mission first, like, we're saving the, climate. That's why I think climate tech's taking off. Everyone can say we have to fight climate change, or you find a way to, I think, have the hub and spoke model. I think you have to get the team has to buy into each other. I think that's very hard to, virtually. You may know of a solution or two.
Yeah, I think a lot of people are thinking about future work. You talked about it being a hot topic. More on that to come. All right, but Alex, we've got more untold stories that the TechTO community needs to discover. And we are going to be talking about behind the raise on TechTO's founders and funding. And tomorrow we have a very special episode. Who is going to be there, Alex?
So Laith from Silicon Valley Bank and Matt from Scale Up Ventures. Silicon Valley Bank is known to do this research on the state of the market. And we're going to talk about the Canadian market and their perspective on it from their research and what they found.
Awesome. And they do that every year, right?
I think it's every 6 months.
Every 6 months. All right. And what do you think we're going to see? Any sneak peaks or previews on what we're going to hear about tomorrow?
I think we're going to see it's a dead market. No one's raising.
Oh, yeah. We just had the 33rd $100 million raise this year. I do not think that is what it is going to say. Very nice. Okay, now the lightning round. First up, iNovia partners are part of a newly listed SPAC. What is going on here, Alex?
So two of the partners from iNovia, Chris Arsenault and Patrick Pichette, are directors on a new SPAC that was listed this week on the New York Stock Exchange called SOAR Technology. It's basically Joe Poulin, who was from Luxury Retreats, which was an investment by iNovia. I think he's an LP in iNovia. And Peter Kern, who's an ex-Expedia Group, are running the SPAC, but I know was involved. So then they raised $230 million, and they can go spend up to $1 billion buying something.
And have they stated a certain industry or focus? It seems like they've got some hospitality chops on that team.
The press release was very generic, saying, "Hey, we can buy any company in North America that's growing fast and that's in tech."
All right.
When I look at the people involved, I'd be very surprised if it's not travel.
Yeah.
And especially SOAR Technology seems to sound like a plane or something like that.
All right. Well, you've got some stuff in the portfolio they should look at, but yeah, I like it.
Yeah, if there's one or two, if they want to take them out of the $1 billion,
that's
right. Maybe we can talk to the founders.
So why do you care about this news, Alex?
Well, so this indirectly allows iNovia to continue to invest in companies throughout their life cycle. So it's I think the only fund in Canada that can go almost from early stage to growth to now being public. So it doesn't mean they're going to do it, but they have the ability to invest through different entities throughout the life cycle of a company, which is interesting. You're seeing it in the States. It seems to be a trend. The other thing that seems to be here, there's second Canadian VC to jump on a SPAC train. I love the multi-stage impact. I'm not as excited about the SPAC. I feel like SPACs have just done poorly. It seems late to the game. Let's see what happens. Maybe this expertise might be able to go buy a travel company, I think, and do well, but not that crazy excited about SPACs right now.
Who's been your favorite SPAC to date?
We'll go with OpenDoor just because we talked about
that. Okay.
And they're top of mind.
All right. Definitely, so OpenDoor is the SPAC to beat, right?
Yeah, definitely not Virgin Galactic.
All right. Next up, Foxquilt raises $8 million. I have to ask, who is Foxquilt?
Foxquilt is an insurtech company that develops, underwrites, and distributes its own commercial insurance products. And what they do is they're using AI and data analytics to get you more precise, less generic insurance product for basically small businesses.
And why do you care about this raise?
Well, it's funny. There's been lots of attention to fintech companies.